Hello, traders. It's 8:01 a.m. Chicago time on Tuesday, the 19th of November, 2019. This is episode number 1642. As always, derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, we keep popping higher. The market just can't get enough. We're trading at 3120 all-time highs in the S&Ps. The DAX is the leader this morning, up 1%, 132 points. So all is good in the world today. The market is definitely in a risk-on mood. And a lot of it's driven by some European numbers, European car registrations at all-time highs. And then I don't know what else is going on, to be honest with you, in terms of what's pushing this. I'm not trying to justify it. The meeting between POTUS and Jay Powell yesterday was intended to help the Fed chair become a little more relaxed about interest rates, which is very, very beneficial to the president in an election year, of course. But that's where we stand. We did get some numbers at the bottom of the last hour, and we got housing starts came in at 1.314 million versus 1.32. Building permits, which was weaker. Building permits were stronger. And that's really it. I'm not seeing, Home Depot reported pretty much in line. Lighter revenue, and so on. Not too much to talk about here, other than the market is just in an uptrend. So here we are. The laggard today is crude. Crude is going through an interesting process now. Crude is breaking below the microcomposite point of control in the region and is heading towards the low end of the balance range, which has been going for about a month now. Crude is the weakest. It's down almost $1, down 1.7% from settlement, trading at 56.17. Remember, crude is trading January 2020. CLF0 is the symbol for the current contract. Let's take a look at what's on the calendar. To me, there's not much here. I'm not seeing much in the way of economic releases scheduled. Balanced trade comes out for Japan this evening at about 6:50 p.m. and then a loan prime rate out of China at 8:30 p.m. for those who are trading the Asian session. Let's switch gears here and take a look at the review. Here's the expectation from yesterday. So we talked yesterday about, let me turn down my news feed. We talked yesterday about the likelihood, the fact that we're opening right in value with a very weak high at 31.1950. The primary expectation, for those who are new, is outlined. That's the key trade of the day. The key trade of the day was looking for what? A push to 31.11. If you have this, if these numbers seem scrambled to you, use the little setup wheel in the bottom right corner of your YouTube window and switch it to 1080p so you can get some clarity. You can see that on the right, the expectation was 31.11 even, with a push to 31.2450, 31.2450, which was right here. This is the expected action on yesterday. I expected the gap zone to remain open, and the expectation is any push lower, if it shows weakness in the order flow, is an opportunity to buy. Friday was clearly a gap and go situation, closing at highs. It's not the greatest day to, yesterday was not the greatest day to sell short. Hopefully you did not. But that's the primary scenario. The only scenario that looks to sell short is a push higher that fails through the open with a pullback short for continuation with 31.11. Here's what actually happened yesterday. Boom. 31.11 pulls back. Open auction goes 31.11 and then turns around with an impulse right there for continuation to 31.2350. Remember, I expected 31.2450. The goal here, just as a reminder, because I don't want to be one of these guys that sits here and speaks up or talks up things that actually work and kind of hides the things that don't. I see that often. The goal here is not to capture the top and bottom. That is not the goal of these scenarios. Again, these were the scenarios. 31.11 pullback. Why? The low volume node left behind from the day before. The area of the point of control, very obvious. This is a key low volume node. This is a very obvious test area. They're not always this obvious. And then on the other end, given range probabilities, and I talked about this yesterday, given range probabilities, will likely push us into 31.2450. We stopped at 31.2350. So the key trade of the day is exactly what played out. This is not always the case. The beautiful pullback right here, unfortunately, late in the day, a beautiful pullback to IB high, mid, VWAP, low volume node for the day, and the prior day's close, all in that area for a quick rotation up, only yielded about 3.5, 4 points on that. Those are the only two trades really for the day. And the entry for the long was not, you can call me a liar if I said 31.11 is the entry. That's not the case. I do not pick bottoms or tops. The entry here is a relatively weak pullback after an impulse towards mid for the continuation higher, take off most of the size on the break of the impulse high at 31.1850, and then hang tight for anything that continues. That's the reality trade rather than the best case scenario or made up trade. So that's where we stand. Looking at the overnight session, okay volume. First thing we notice on the overnight session, incomplete profile in the overnight. You can see that it's a bit of a P shape with a very, very blunt top. There is no excess here. We don't see a taper at the top. The market is likely not done exploring to the upside. That's what the overnight session is saying. And to me, it just looks like it's we're at the point of control, but being as we are above the prior day's range, above mid, above VWAP, above the consolidation area down here, which acts as a base now or a stop zone for longs, something beneath 31.24, 23 or so for the long into 32.50. So what's above us? Above us, 31.34 and a half and 31.41. These are measured move targets. So far, the measured moves have been pretty good. I don't lean on those. I don't expect too much there, but so far they've been pretty good at getting a pause as we push into them. So that's that. That's the overnight session. Here's the bigger picture. This is the composite profile and a general view of what the market has been doing, the areas of balance and imbalance, and we are currently still one-time framing up and are in rally mode. I don't see a reason to get short just yet. The market closed near highs yesterday on a gap up. The probabilities are for a gap and go situation yet again. Look at this delta. As price climbs higher, the delta is also climbing higher. There's good participation from buyers and lifting buying aggressors in lifting the offer. And again, not a good sign to get for those who are looking to get short. Here's the order flow. This is what things look like overnight. Oops, I did not reset my data. So let's clean that up a little bit. Boop, 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 boop. So here's what we've got. We opened back up at 5 p.m. Chicago time, and we have been climbing and climbing. We had a nice little collision right in this area right here, and it's really been relentless buying throughout the overnight session. We pushed into the liquidity at 31.2950 and 31.29 and 31.30. And then have actually pushed into even more liquidity at 32.50. This liquidity here, to me, looks a lot like offers to exit, offers to get out of existing trades. The liquidity up top here at 31.35 looks like some sort of an option spread play, possibly. This is going to be an area I'm going to watch very carefully on the open. This is the expected target. 31.35's expected target on the open on a push higher. And then the liquidity above there is 31.37, which is a blank area for me. The next area up is 41.50 as mentioned. Not seeing much liquidity up there. It is Tuesday, so we're likely to see an expansion in volatility. Why did this reset? Huh, interesting. Okay, so that's interesting. We're likely to, given that it's Tuesday, we're likely to see more volatility. And we're likely to catch a little bit of movement, but the expectation today is that as it squeezes higher into 31.35, it's likely to have a hard time pushing through. So I wouldn't be surprised if, although we break higher, we're likely not to get very far once that happens. We have stretched the ranges quite a bit already, but for the beginning of the week. So we'll see. Statistically, it is likely to face some overhead. So let's move on. Let's move on to what's expected for today. I'm going to keep pestering you guys again and again and again to do what? To sign this petition. Here it is. It's a petition for CME Group to release the micro crude and get it out there. This takes about 30 seconds to complete. The URL is ft71.com/MCL, all caps. I've typed it into the chat box. All you have to do is click in there and just fill it out. It has crossed the 1,000 signature mark yesterday. I've had it up for 7 days, I think. So it's performing very, very well. Let's see if we can get 2,000 to 2,000. Let's get them to put out a product that I think all of us can benefit from. We're asking for a 1/10 size crude and something that allows people to trade energies, which are quite active and really a good trade, in my opinion, right now. But the big crude contract is wiping people out. So we're asking for the micros instead. At the end of this segment here, I'm going to be talking real quick about the importance of sampling for you to make the turn. I'm going to spend about 5 minutes talking about it with an example. I suggest you stick around. A very important point and something that is hardly ever talked about is really key to traders making a turn. Remember, my background is prop trading and backing prop traders. And one of the most important things is that traders get enough samples. And that's where these micros are important, because although on a commission basis, maybe they cost a little bit more, who cares? But the fact is, it's our losses that wipe us out. It's not generally our costs unless we're trading thousands of contracts a day, right? So open auction, out of range, expecting the market to make a feeble attempt lower. I'm looking for buyers to step in and push it through the week high at 31.3250 into 31.35. I expect it to balance out at 31.35 and move back down towards the overnight point of control and to hold steady here into the end of the session. The secondary, believe it or not, is likely to be similar, push up into the overnight high, consolidate, and then push lower to bring us back into 31.24, yesterday's target, and then back over into 31.20, 31.19, which was the high right here, which is the point of control from yesterday and a very prominent point of control as it is. I expect it to wiggle around in there and bounce back up. Frankly, for me, the better trade is scenario 2, but the market doesn't care what I think. Nobody cares what I think. It is what the market actually advertises and what we can get on that matters. Sometimes we have all our ducks in a row, but the market moves away too quickly to give us a good risk reward, and it just doesn't work out. So we grab what we can. It's not about what I think of it. Being as we are at all-time highs, we always have the possibility of responsive selling on scenario 3, an open test impulse up into 32, 35, and then to start to squeeze towards 41. That's the next big area up there. Remember, there's a stock zone up there, 41, and then consolidate into the close. That's scenario 3. For scenario 3, if we do get a drive and an impulse, so this will be an open test, hard to write with a mouse, drive type of open. The area that I'm looking for a test on is 41.50. That's what I'm looking for as a test on scenario 3. Those are your 3 scenarios. For a minute, let's talk. And I'm going to have this up just to see if I can catch your attention for a minute. Let's talk about sampling. There is no way to... I've talked about the coin flip a lot, and I've talked about the fact that you cannot get a 50% on a fair coin that has a 50-50 chance of heads or tails. You cannot get that result on 3 flips. You can't get it on 200 flips. You can't get it on 500 flips. It takes thousands for it to move towards and close to 50%. It'll likely never be exactly 50%. It may be 50.4 or 50.0092 or 49.8562 or something like that, but it'll likely never be 50-50. So I want to show you this Monte Carlo simulation that's really interesting. It's a square, and the purpose of this simulation is to place dots randomly throughout this square. And what we notice is, because it's a square that generates a circle within it, the radius is known or the diameter is known. What you notice is eventually it converges towards pi. Now, I'm going to tell you that this seems really, really irrelevant and more like algo kind of thinking or whatever, but this is what happens with our trading. Have I lost you guys? Or did a bunch of you leave already? This little thing is really important. This is about setting your mindset for trading. This is why it's important. No, it has nothing to do with today's trading, but this little fact is so important to your trading, in that you have to think in terms shown here. So given that this is a circle, given that, it rests inside of a square, there's an entire, the formula for how the Monte Carlo simulation converges. The outcome, as I hit the start button, we're going to get 1 million samples. Okay, 1 million samples. The outcome of this is expected to converge towards pi, which is 3.142, the dotted line there. I see the exact same process, or the exact same graph in someone's expectancy. I see the exact same graph in someone's win rate. It's erratic at the beginning, and then it smooths out and moves towards their true edge over time. So here it is. Take a look. See these dots? It's plotting these dots, these red circles, and it's combining those. And you'll see that at the beginning, it's very erratic. Okay, in the first 100 tosses, it's quite erratic. After 1,000 tosses, it's getting close. It's converging on pi. This is all random, by the way. It converges on pi, and at 10,000, it is right on top of pi. And you can see it's the result currently. If I stop this, the result is 3.1478, right? Right here versus pi, which we know is 3.142, right? But as the simulation keeps going and you get more samples, there are 400 and 600,000 points, 800,000 points, 1,000,000 points. Now you're getting to where it looks the same, right? This is your trading career right here. And this is what happens in trading. And you know what? Where does everybody blow up? They blow up right here. 50, 100 trades, maybe 200 trades, 500 trades, and their results are erratic. And the results are, the emotions kick in when we have this kind of thing. When you have these swings, our goal as traders is to manage risk to the point that we can end up at this end of the curve. That's when you've made it. When you end up at this end of the curve. So when you hear somebody talking, when you hear me talking, or anybody else that has traded for a while, and they say it's all about managing risks and creating a large sample of trades, it sounds like I'm asking you to trade a lot. No, I'm asking you to take as many samples as possible at the lowest cost possible to realize your edge. And you can do this by simulating your trades. But that one trade where you ignored your stop or changed your stop, and all of a sudden something that should have cost you 2% of your account now costs you 30% of the account, you're right here. When you do that, you're right here. You're in this crazy erratic part of the curve. Now, I can reset this and do it again randomly. A brand new curve. Look at how crazy that is at the beginning. Okay? And that's how things are in general. It's not as crazy as this, but I have looked at people's expectancy curves for years, and I have looked, and they all look the same. They all look erratic at the beginning. The beginning of a trading system tends to look crazy at the beginning, and then it starts to converge on 3.142, or it's 3.1418 or something like that. Round it to 2. But over time, these samples start to come into play. What is my point that you need to walk away with 5 minutes before the market opens? Manage risk. Manage risk, because your goal is to get as many trades as you can in so that it converges on your edge. Most people, even if they are super disciplined, militant about their discipline and execution in sim, go out live and they lose money. And generally it's because they have to stop here. The idea is to keep pushing forward at the lowest cost possible. This is why the micros were important to me back in 2012. This is why the micro CL is really important to me in 2019. It's because it allows you to take a lot of samples with a small account size so you can start to learn and converge upon your true edge if you have one. That's all I'll leave you with today. Good luck, and I'll catch you tomorrow morning.